Good morning. Welcome to the Money Beat Show. I am Paul Vigna. The markets up today. You look at the Dow Jones Industrial Average up 52 points. Call it modestly higher. The NASDAQ up almost 1%. A little more there. Small stocks been very volatile. S&P up about 0.5%. S&P Dow lurking around these all-time highs. You had the jobless claims this morning. They came out lower, so the market is higher today. But it has been a choppy market for a long time, and that choppy market, it's hard not only on individual investors. Hedge funds turned in a second consecutive month of losses last month, only the second back-to-back monthly loss since 2012. And Rob Copeland has the details on this one. Rob, very interesting because, you think of hedge funds, and maybe I'm not sophisticated enough to understand what a hedge fund really does. But my thought was that a hedge fund is supposed to make you money in any environment.
Right. Look, hedge funds have really changed their tune in recent years from kind of the popular conception. It used to be you thought a hedge fund would break the Bank of England. It would get you 100% return
right.
in a year. They've really rebranded themselves as a provider of steady returns for these huge institutional investors who really just want to hit 8 to 10% a year. The problem is they really haven't been doing that lately. And this year, at least last month, was the second consecutive month of losses. That's the first time that's happened in 2 years.
Yeah, it's interesting because it has been a harder market this year than last year, obviously. But these guys are, and they extract quite a nice, commission to manage this. Do investors care that they're not even, as you point out in your story, they're not even matching what the S&P is doing. You could just buy an index fund and
I think investors care a lot less that they're not matching the S&P and more that here we have some volatility, here we have some dispersion. These are guys who can bet both long and short, and they're not making money. The average fund was actually lost money last month. It's less about the S&P or what the Barclays Bond Index does, and more that over a period of time, they have to be providing steady returns or it's not worth the fee.
Right. And speaking of those, we have a full screen here we want to pull up and show you. You can see what's going on there between the hedge funds, the Barclays, and the S&P 500. Yeah, look, 2 months of mild losses. And it wasn't every single hedge fund, as you point out. A couple guys actually made some money. 2 months of mild losses is not going to, really crush anybody. And it's not going to make people rethink hedge funds. Talk to me about some of the guys that made money, though.
Well, you've got the famous Bill Ackman, the very loud activist, and he did very, very well last month by essentially structuring his own deal in which he could not lose, backing a firm to buy another firm. You have a guy, Andy Hall, who very famous for making $100 million at Citigroup when he was a trader there. He did very well doing betting on oil prices and other commodities going up. The problem is it tends to be the guys who are doing well this year are not the ones who did well last year. And if you can't put together a string of positive returns, your investors aren't going to be happy. They aren't going to switch their manager every year. So if you have to switch your manager every year to do well, overall, you're not going to do that well.
Right. Is this being looked at as a one-off or a two-off? Or is there some larger thing here that we might be missing?
Look, there really is no evidence that the biggest investors are shying away from hedge funds. They actually continue to put in more. The industry continues to grow bigger. But we are seeing is just a bit more turnover. There were a string of funds earlier this year, very large, that shut down. You have a big firm that I mentioned in the story, Code2, which actually gave back money to investors because they said, we basically don't think there's the opportunity to do $9 billion of investments. I think that's more what you're seeing than necessarily people shying away from hedge funds.
All right, Rob Copeland, great. Thank you very much.
Thanks so much.